This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 9 p.m., 9:09 p.m. on a rainy evening out here on the East Coast on the Jersey City, New York City waterfront. It is October 20th, 2019, and this is another one of those exceptional strategic live webinars. I'd like to think that these are extremely helpful to a lot of people. That includes our members, free trial subscribers, and anyone out there with the internet connection. I do know there are a bunch of subscribers on the Google YouTube channel that these sessions are uploaded to who are in the process of joining us. So all I have to say to them is come on in, because that's where you see the real stuff. Once you become a member, a gold or platinum member, you get to see the real stuff at real time during market hours. You can take you can take action on those alerts, strategic tactical alerts, precision charts, and make money. That's really what it's all about. And these webinars are extremely terrific roadmaps, visual roadmaps on what might happen, what we call predictive analytics. And I would say a good portion of the time, at least 70 to 80% of the time, they hit the mark pretty much on the timeline that I say it's going to happen. So these forecasts are extremely helpful for people who are looking to manage their trades, not bail out at the wrong time, and not be scared all the time. That's what it's all about. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. We have a lot of important critical stuff going on. What's new? Every day is something important or critical, right? But on a serious note, yes, there is the Brexit drama being played out right now. It's actually positive. I don't want to get into the nitty-gritty of it. One of our loyal members, Mike, had asked me to explain the whole Brexit process. I would like to say that it is I'll give you the simplified explanation of it, the way I look at it and the way the market looks at it. But in order to understand the process of what this whole Brexit, like Britain's exit out of the EU or European Union economic bloc, I will post two fantastic articles within the within the next 24 hours that I suggest you all read. And that'll explain it in far more detail what it is. If you really want to understand what Brexit's all about, why it affects us, why it affects the global economy, why it affects the European economy, which is one of our largest trading partners, and all that stuff. Okay? Because to explain that in nitty-gritty and in full detail will take a pretty long time, and I don't want to go through that right now. So in a nutshell, the Brexit drama has been played out all day Saturday, UK time, London time, and Boris Johnson, the current Prime Minister of England, failed to get his Brexit deal passed through the Parliament. So at this point, what the British Parliament has done, according to procedural measures, is they have asked the European Union again to extend the deadline. So the deadline was October 31st, okay? The hard deadline, what we call the hard Brexit. So in a simple way, you have to understand, we don't want a hard Brexit. No one wants a hard Brexit. Even the Tories or the Republicans, or the Conservatives of, which is like the Republican Party of England, the Tories, they don't want even a hard Brexit, because a hard Brexit disrupts a lot of economic correlations between the United Kingdom, England, European Union, and the rest of the world. So that causes even though the markets are prepared for it, and that's why we have had some pretty monster sell-offs in months ago, and even sometimes every time there's like sort of a shock Brexit news coming from nowhere, we have had quick market sell-offs. The markets are kind of prepared for it. So even if we get a hard Brexit, in other words, it's a, excuse my French, don't take it the wrong way, it's like a FU, it's like an FU exit, okay? So call it a Fuxit, I don't know. So, you just say, I don't care, I'm leaving, see you later, we'll work out stuff later. Now, it doesn't work like that in the real world economy, okay? There's a lot of politics involved in the picture, which I don't want to get into. And there are hardcore Brexiteers who want to leave the European Union and just say, that's it, we don't want to deal with you, which is a full-scale economic disaster. And there are people who say, no, let's try to work out something where we get what we're looking for, they get what they're looking for, and let's try to live in some level of economic harmony that benefits the UK, that doesn't cut off all ties with the European Union, which has very powerful forces in there, right? Economies, Germany, France, Spain, Italy. These are not small economies, right? And they're not just tourist destinations. These are very serious economies with lots of strong manufacturing power, as we know. And Germany being obviously the king. So obviously, they want something which is somewhat of a deal. Now, Boris Johnson had and Juncker, who is Juncker, who is the EU chief. They do have an interim deal, but Boris Johnson couldn't get it passed through his own parliament this morning. So the parliament now is saying, let's push it out, push it beyond October 31st, and let's see what we can do. So that drama is being played out right now. I do not believe there's going to be a hard Brexit, and even if it does happen, we will have a short-term pullback in the market in the range of maybe 400 to 600 points, maybe less, because the market is very prepared for it, and they're pretty tired of it, if you ask me, because they're like squabbling like kids, but then we squabble like kids here, so what's the difference? So basically, that's it. And I'll put out the details, the fantastic articles, some, in simple English, you can understand what the dynamics of it is right now. Now, the other stuff that affects Brexit, first thing when Brexit happens, somebody asked me, so what sector gets hit most? Well, the biggest ties that we have, one of the biggest ties that we have with Europe and, of course, with England is financial, banking, right? So financial sector generally tends to get hit first when you have a Brexit shock. Just keep that in mind. So Goldman Sachs of the world, the JP Morgans, which have huge operations in England. In fact, they say that if you have a hard Brexit, almost 60% of the multinational financial giants will move their headquarters from London, which is the second most powerful financial center next to New York, away to Frankfurt, Germany, maybe to Paris, but those are the two main places. All right. So obviously nobody in England, not even the hardcore Brexiteers who want out of the European Union, want that, because that is very damaging. And the number that's thrown around is somewhere like $86 billion hit, which for the economy of the United Kingdom is a large hit. So obviously no one wants to see that happen, because if their markets fall, they pull down our market short term, and it becomes a little bit messy. So that's basically it, just so you have to know. And I'll put out the articles, take a good look at it. In the meantime, the futures seem to be reacting fine. Futures are up about 6. I am just in the process of uploading the tactical charts, which are our roadmaps to navigate all types of volatility. As you know, we have done an extremely good job here at Clueless Trading in navigating these markets through thick or thin, and I intend to keep on delivering that type of stellar roadmaps and charts and predictions and forecasts and alerts and all those good stuff to you guys going forward. The other thing that's going on is China, which is an ongoing thing. I have been a big proponent and a supporter of what has transpired. I think President Donald Trump and Premier Li Hua, who was here, did a phenomenal job. Even though the criticism from every corner, both the Republicans as well as Democrats, this is the funny part, right, was vicious. Like, that's not really a deal. China sucks. We're not going to do anything with them. In the meantime, President Trump was warm, friendly, diplomatic, strategic, tactical. All right. And phase one, we're in the middle of phase one. So he said that very clearly in the press conference on a couple of days ago. Markets rallied prior to that. Then they rallied more and they pulled back a little bit. And then this weekend, and I put that up on the Twitter feed, Premier Li Hua from the other side validated the same points, that they are working very constructively in order to get phase one done. And the APEC summit, that's the Asian Pacific Economic Summit conference, APEC, in Santiago, Chile. I believe it's in November, where President Trump said he would at that point get all the paperwork and everything ready. And it does take some time to put these things on paper. Like he's like good old Donald like to say, let's paper it. I mean, I love that term. Like let's paper it. It's like a little mafia term. Hey, let's get it on paper, boys. You know. So except the mafia would never get anything on paper. So anyway, so he said, let's paper it. Let's get that done. And he'd like to have a ceremonial sign up with the King of China, President Xi, like President Donald Trump likes to say, and I really believe, I think he likes him a lot. Why shouldn't he? It's Premier Xi, and have a formal signing ceremony. How great would that be? Right? So I think that's going well. And now that it's being validated from the China side, this is their first real official statement saying that the talks went really well, and the paper and all the necessary arrangements for the phase 1 of the U.S.-China trade agreement, there's phase 1 and phase 2, is going well. Now the market, like, okay, this is real, because we all know that President Trump many times have, and his staff, the White House, different members, Mnuchin or Lighthizer, not really Lighthizer, Mnuchin or Kudlow, or even Peter Navarro, or even Lighthizer sometimes, they have said things which have been contradictory. And you know how the markets have reacted. The markets have reacted with vicious volatility. Okay, there's nothing new on that. So the markets are a little bit skeptical sometimes, when they hear something from President Trump and then 2 days later somebody else refutes it and all that stuff. But now, in my opinion, it's been validated, because the Chinese, whatever their issues are and stuff, they are they tend to be a little bit more stoic, a little bit more boring. And so when they and Premier Li Huao, the chief trade negotiator and vice premier of China, the gentleman who was here making that comment at a press conference this weekend, validates that point. I'm okay with that. All right. I always, I mean, I've always, my feelings about this. I think they're on their way to cutting an interim deal, and then whatever happens down the road. We'll deal with it. But we need to get tensions down, and that's exactly why the markets are doing so well. All right, ladies and gentlemen, this is not rocket science. The only rocket science is the rocket science you think you might have in your head, and by sitting out trades which are going bonkers. You got to take opportunity of this window of opportunity that we have going into the end of the year. Yes, in between we are going to get some vicious 300, 400, 500 point moves, but in between, overall, we're going higher, in my opinion. Things change. I'll be the first one to try to forecast that or predict that or see that before it happens. But right now, things ain't changing. Things are better. Big all around, from every parts of the media, right and left. You're not hearing anything good. You're hearing a lot of negative stuff. And believe me, my eyes and my ears are glued to pretty much every single financial stuff and other media stuff that's going on, political stuff that's going on here and overseas, primarily in the US. And I'm not hearing anything really positive. And even from the Wall Street idiots, many of them, okay, they're all super negative. And so far, on the few earnings that have come out, 70% of them have beaten these lowered estimates, and some of them have gone through the roof. We had one of our biggest winners as recently as Friday, Kansas Southern. The stock was up, what, $10, $11? And the markets were down on Friday, yet most of our stocks were up. What gives? You have to be stock selective. Markets were down for a simple reason. Boeing was one reason, because of that talk about that Boeing hit things, and we shall see. I bought the pullback, limited amount, told you guys to do that. Boeing's earnings are on Wednesday. I think Boeing bounces. Technically, it looks good for a buy-in, i.e. entry. Trading is about opportunistic entries and opportunistic exits. It's not about perfection. Like, oh, I'm going to get into the market like I used to hear back in my days on Wall Street, where things are fine. Well, dude, by the time things are fine, the market's going to be a gazillion points higher. and be ready for a sell-off. You want to buy when things are not fine, within reason, within reason. So you got to get that as a trader. You got to get that through your head. If you want to buy comfort, like Warren Buffett's famous saying, you want to buy certainty. Like, certainly this stock will go up. Frank, what do you think? Is this a real certain deal? You hear that sometimes. That's fine. It's a normal human talk. Well, by the time things are certain, you have to pay a high price for certainty. I didn't say that. Warren Buffett, one of the greatest investors of all time, said that. One of his famous quotes, which has never left my mind. You pay a very high price for certainty. What does that mean in simple English? It means by the time it's certain, that means everybody's seen it. That means the stock's 20% higher. So you want to pay a very high price for certainty? Please go ahead and keep on doing the same old silly stuff that many people do. Many RET or retail investors do all the time, which is buy close to the highs, make a little, and then give back a lot. I would rather bite my teeth, buy some technical, tactical, ugly lows where I'm seeing indicators flashing buy on the McClellan oscillator, on the stochastics, on many other indicators. Okay, they're showing you two of the ones that I show all the time, like blood red, MACD, things like that, deep oversold. Those are the times to be really aggressive, or at least put in a position. Like here. And this like here is basically was, believe it or not, was 12:15 in the afternoon on the 18th. So anyway, let me try to go back a little bit. What am I looking for? I am looking for the hourly chart. So anyway, so the bottom line is I don't want to keep on being the preacher stuff here tonight. You guys know what you need to do. I am looking for a 1 hour chart, and there, which gives me a slightly broader picture. Then we're going to do what we do. Look at the daily. So as I'm setting this up, so we have earnings seasons full blast starting this week. We had great overall, very good earnings from the banks. And the ones we didn't play kind of went down, then they went up, like Goldman Sachs. We didn't play that earnings, stock was down, stock went up. And the other ones did very well, JP Morgan, even Bank of America. I sold it at almost a double, those little puny little things. The October 25, 30 calls that was bought at what? Like around 30 cents, 40 cents? They went to 80 cents the following morning. So again, do what you need to do, my friends, because I'm just going to keep on delivering the message, and then you all are adults. You guys decide where you stand. But my gut feeling tells me that the markets, at least, I shouldn't say gut feelings. Forget the gut feelings part. Just the charts are telling us that we have a little bit more room to move. And I keep on showing that every single day. Nobody's going to the moon. Nobody's crashing to the bottom of the canyon. We have a little bit more room to move, and I believe that's where the markets are going. So we'll start off with the daily chart. To be really quick, daily chart looks good. The upper Bollinger is somewhere around 3,020, 3,030. I think we're getting there. And the overall indicators are showing the same thing. And that's right here. Will we bust a move and make a new high? There is a very strong possibility we do. Keep in mind that we are simply back to where we were in August. Through all this volatility, we are simply back to where we're back in August, September, and now October. So we're at a triple top. Once you hit those tops, the nitty-gritty I've explained in all my tactical charts with my comments, my numbers, blah, 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 my previous webinars. So I'm not going to get into that tonight. You get into the triple top, of course you're going to get some pullback. But there is a good possibility that the markets rally and make a new high and break this range that the market's been stuck on this year since July, August. It's actually July, August, September, October. We're not there yet. So even this move here is worth a good solid 200% or so on the SPY. Another 300 to 400 points on the Dow, if not a little bit more, which would bring us over 27,000 Dow again. Individual stock, different story. Many of them have a lot of room to move. I'll be showing you guys some powerful ones. Okay, look at our healthcare stocks. Market blood red. These are ripping. United Health, Anthem, Humana, Medicines Company, Medco, and other individual stocks like Roku, which rip higher, pull back a little bit, buy the pullback, and Roku's earnings, I believe, are this week. Okay, lots of tech stocks, not a lot, but a bunch of them are still way off their 52-week highs. What if they deliver some nice numbers? You're going to buy it because it's almost certain? No, you want to buy them on a short basis when they're coming off the bottom. All right. So that's it. So this is where the market is. This is good. This is good. And this is the daily longer term chart, cutting out the individual daily noise. This is looking to me like a cup and handle, a sideways handle, a range trading. Okay? If it breaks below the 34-day moving average or heads towards there, if it heads towards the 34-day moving average, what is that pattern? That is a inverse head and shoulder. Left shoulder, double head, bottom, right shoulder, major support. Major support. The market gets enough kinetic energy, it's built up like a slingshot, then breaks out. If it breaks this, that's a different story. The world's not ending, but you want to be more on the short side because the market's going to hit this big down uptrend line that started all the way in August on that pivotal bottom where the markets basically went down 800 points, 1,000 points, I believe, something like that, hundreds of points, 600 to 800 points, and then turned around. It was all red and then bang. Very powerful. And then the markets went up 1,200 points in 3 days. It's the nature of the beast, okay? So do I think it's going to come this way? I don't know. I'll see what the charts tell me. But overall economic fundamentals and the broader picture that's happening on the global side, it tells me that this will go like this, just the way it did here. So mixing in the fundamental economic backdrop, mixing it with the technical, showing you the KISS version, keep it simple, stupid version, okay? It looks like the market bias is higher. Oh, and let's take into account the sentiment, which I explained very clearly, which I do all the time. The sentiment is so goddamn bearish, it's sickening, which is great. I'm excited. Let them all be, and let's, maybe a lot of people in our group, I don't know, be really bearish and scared, because that propels the market to go higher. Lots of cash on the side, which is starting to slowly but surely start to come back into the market. They haven't even started that macro rotation from bonds to stocks. That hasn't even started, believe me. So bottom line is, technically speaking, looks fine. What happened here? The same thing that is happening here, this is the bigger version of that. It's the same pattern recognition. Look, triple bottom, then a breakout. Same look, double bottom, then a breakout. This breakout continued over the neckline. So I say we hit the upper end of the band, which is retesting the all-time highs. Did the same thing here, it went back and retested the previous all-time high. There's nothing magical about this. It's all very robotic. So pattern recognition is key. So that's your daily. This is your hourly. This is very important to us traders because when we wake up in the morning, let's say futures right now up 7. Let's say I wake up in the morning tomorrow. I wake up sometimes like around 4 in the morning. Hi, Jody. And just to look, just automatically my bio clock goes off. Go straight to investing.com on one of my iPhones, because that's where the best place to look on futures. And a lot of times, oh my God, here we go again. Futures are down 14. Quickly scour my other screen to see what the news is. Could be anything. Okay. It turns out that Boris Johnson is a transvestite. No, I'm just kidding. I shouldn't make these politically improper jokes. So Boris Johnson, okay, comes out of the closet. Okay, I don't know. Next thing you know, the U.S. markets are UK markets are collapsing. Like all kinds of crap, right? Chinese premier said received letter from Donald saying that Donald hates him. I'm making feeble attempts at humor. Okay. So anyway, anything can happen. Futures could be down 14. So the first thing I do is I look at these type of charts. I look at my quad. That's the ultimate one I look at. On my other PC, I turn on the computers. All the, multiple screens come alive. I look first straight down on my technicals and I say, all right, where are we? How are we going to attack this day? So it doesn't matter how you feel. It's how the temperature on the charts are. Are they deep oversold? Are we holding the levels? Those are the things which matter to me as a trader that I message out to all of you. And then you guys take that fantastic information and do what you need to do with it. That's how you make money in the stock market. You don't make real money in the stock markets by following everybody else. Because how do you make money? I mean, that's a law of probability. If you bet on the same horse and all the the favorite, you're gonna make less money because there's less of a handicap, or like the odds are. You want to buy the one with the highest odds. So if that one wins, let's say 20 to 1, wow, you're $20, you win $400. Remember, all of us have access to the same information. But all of us are not looking at things the same way. The way we look at things the same way. That's the secret sauce. The way you interpret the information you're looking at is what's going to make you money. That's what I try to do for everybody every day and for myself. All right. So I look at it and I say, okay, let's get to work. So this is the swing chart. This gives us a nice broader view. These were the two major flash crashes we have incurred since the 25th or 22nd to 25th of August, right? This big one highlighted for people to focus on. And then I said we were probably going to have a W formation building up based on everything that I saw, and it happened like that. I told you guys several times that this was a pattern symmetry that is going to repeat itself. I noticed it way early. Go through my Twitter feed, look up August 25th. Look at my videos from that time. And that is exactly how it's getting played out. Remember one thing. The algos have a certain playbook. If this happens, this is how much we're going to drop. If this happens, this is how much we're going to move higher. It's no magic. They don't randomly go up 400 points. They have a preset limit how much they're going to go up, how much they're going to go down. So emotional traders, lots of emotional institutional managers, lots of emotional talking heads in the media, analysts included, who happen to be very emotional, a lot of them, okay? They think it's just a one-way train to the bottom of the canyon or straight up. Most of them think it's a one-way train to the bottom of the canyon. That everything's going to fail. U.S.-China trade talks, even despite the fact it was a huge success, the first part is going to fail. That's all you hear. So great. You want to hear that. It gives you a chance to still get into things cheaper. So please, for God's sakes, try to think like that. We call it mental calibration. If you can mentally calibrate and start thinking like that, you're going to make a heck of a lot more money. You're going to be a heck of a lot more chicken and sell out every single time you make a little money, because you're leaving all that big money on the table. And if you don't think that bothers you, well, that's fine with me. I ain't your daddy, right? I ain't your sugar daddy. So I just feel that people should mentally calibrate. I try to do it every day. So these patterns are very similar. So all I'm simply saying is that if you look at this chart, it's pretty clear from a technical perspective that if this was a purely technical market without emotional volatility or black swan, which is like a sudden unquantifiable news, whether it's a tweet out of President Trump, whether it's a nasty comment out of the Chinese ministry, or the other guy who's in the picture right now, the editor of the China Global Times, that's the mouthpiece of the Chinese Communist Party, their government, he tweets out something, markets go, whoa, right? The guy tweets out like, oh, talks went well, but then they slapped each other. Like, what? I'm kidding, but he does put out stuff like that. Oh, talks went well, but they walked out. They had a smirk on their face. Market drops 100 points. Like, there are too many of these emotional, in many cases, rumor mongering. Wall Street Journal runs an article, unsubstantiated. Boom, markets drop 300 points. So yes, these are difficult things to handle, but you can't. Those are mini black swan events. As long as the charts don't break, I am okay. And we know where the charts break. This was your huge breakout level, the big fat green line. If the charts break down here, I have a big fat arrow here. We're going down back to 28.90. And that's a long way down. Can it happen? Sure can happen. But I'm just telling you that these are the roadmaps you need to be glued on. And the more you look at them, the more friendlier they are to you. Remember, charts have a mind of their own. They know when you're just looking at a chart, a cursory glance, or if you're trying to really understand it. And I try to make it as understandable as possible. So in a funny way, in a psychological way, the more you look at a chart, the more the chart is your buddy. And it's going to help you make more money. Period. So here we have a first of all, we got this pattern symmetry. We got, these are the resistance, the support lines. We went up. You guys know by now. We're bull flag. Now I was watching this line here to see if that breached. It might. And if it breaches, I'm going to be watching this line. So will you guys. Because if it goes like this, then all of a sudden, there ain't no bull flag anymore. That means the market is going to be pushing and breaking below this, and you want to reduce your long positions. You want to buy some SPY puts. You want to buy some VIX calls. Short some stocks if you like. I don't particularly like shorting some of these stocks where the markets are so fast and so quick that if I short a Google, for example, is down $6-7, yeah, maybe it goes down another $3-4. I'm up maybe 10-20%. Next thing I know, bang, goes the other way. So I'd rather play it clean through the SPYs, IWM, QQQ, DIA. The ETFs, exchange traded fund derivatives of the indices. Cleaner way of paying it. And they pay the bills, 60-70%, right? Look at the SPYs. I don't need to tell you guys that. So everything's looking good here so far. Futures are up right now 6.5. This is your this is something that I watch. Oh, I'll show it to you guys too. This is the same thing except it's a 15-minute chart. Just zooming in. So if you're trading, let's say the markets are surging, your stock is moving a lot, like stock which actually moves with the market type of stock, not like some of the biotech stocks which really don't care about what the markets are going on. The market can be up 300 points, they're still down. Markets are down 300 points, they're up. Biotechs are a different story, most of the time, to be honest with you. And specialized biotechs are a very different story. So because the type of hedge funds, the type of traders that are in there, they're looking for a particular event-driven situation where the stock will go a lot higher, right? And we have caught many of them. The ones which move with the market, generally speaking, even though they were moving against the market higher, are the HMOs. They generally, because they're New York Stock Exchange stock. Let's not forget, United Health is a Dow Jones Industrial Average stock. It's not a joke. So obviously it gets swayed by the S&P 500 movements. So that's it. So I'm explaining some very simple basic stuff which have always worked, always worked. So there's a lot more zigzag on this. I watch these lines very carefully because it gives me a predictive insight as to whether they're going to really smash the market a lot or whether I should just refrain from shorting or buying SPY puts because they're going to kill me in 10 minutes. But any of you can use these charts to do some fast trades and make money. Some of you do. Some of you text me and say, hey, I just nailed this for like 60% on the SPY puts. Great. That's what I'm here for, to show you this stuff so you can see what if it breaks, if it does this. So this is your short-term chart. This is your Fibonacci retracement. This is your, I need to adjust this Fibonacci retracement right in front of you guys because it has now gone higher. This was the highs. The 50 fib now has moved up here. The 61.8 here. That's why I have the dotted lines just for you guys to focus on. The 78.6 fib is here. These are just clean-cut mathematical roadmaps. That's all. Most of the times you have extreme sell-offs or extreme rallies. So that's when the Fibonacci retracements work the best, from the top and the bottom, just so you know that. So when we drop 800 points, there is a 60 to 70% probability that within 48 hours, you're going to bounce back up to the 50 fib. That's exactly what has happened repeatedly. And that means you can make a very decent sum of money over a 24-hour period if you buy the reversal lows and hold it as the market rushes towards the to each of these Fibonacci levels. But most importantly, within a day or two, it will kiss the 50 Fibonacci level. Then it broke out over that, and these are worth 150 to 260, 300% type of moves on the SPY calls. Now, if you don't want to make those type of numbers, then that's your problem, not mine. Okay, so that's it. Now we're going to talk a couple of stocks. I'm going to have our friends Dominic and Jody. Do I have anything else to say? Not really. I covered the earnings, picture. There's a lot of earnings coming out this week. Oh, here's a little plug. Look, you won't have a small account, and let's say somebody has a small account and they want to make it grow. Okay. Now, sitting on a stock for 3 months is exciting, and it goes up, and slowly your options move up maybe 300%, but it's boring. Right? Because those 3 months, you're generally sitting there going, oh man, I want those 300% now. You got to have an element of greed, right? Options are risk trading, so you need an element of greed. So you basically want a little bit of your portfolio, a little portion of your portfolio, and I'm not going to give you numbers, just whatever, 10% of your portfolio. Let's say with $2,000 trading account, and you want to put options trading account, I should say. So you say, okay, I'm going to play with $300 of that, or $200 of that. Buy some of these cheap options on the earnings. Here's the simple thing that I'm trying to say. You do the basket strategy with a limited amount of money, depending on your account size, in these specific chosen picks, these choice picks that I put out there every day, especially during earnings season, right it towards the latter part of the afternoon. And you put small, buy one contract each. I can assure you, given past performance and recent performance, that you will grow, each of these baskets will grow anywhere from 30 to 40% on average overnight. But you have to be diversified in the basket. You can't just pick one and say, oh, I picked the wrong one. There's no picking the right or wrong one. You got to do a diversified basket strategy with a limited amount of money. There will always be, let's say there are 4, there'll always be one that completely croaks. So calls, let's say they're cheap calls, let's say, $1.50, they'll go down to like 30 cents. Then there's going to be one that goes to $7. You don't believe me? Look what happened with Kansas Southern. Did I tell you guys to buy it in a strategy? I mean, a basket strategy. Then we have reversals, things which initially fall, then they run like a monster. Costco was one of them. They pushed the stock down. Remember, the market is a manipulated beast. Don't ask for fairness from the market. Don't ask for fairness from life. Life ain't fair, and the markets are certainly not fair. There is heavy, before it was human manipulation, right? Certain banks, certain big shots control the market. The Rockefellers, the JP Morgans control the market. Then there's so many other players came into the market. Now we have the robots controlling the market. You don't think they manipulate the market? these algorithmic high frequency trading black box programs, and there's a lot of them. They're trying to cannibalize each other. So the markets are not fair. So Kansas Southern calls were around $2, $3. They went to almost 11, and the stock was up on a day that the market was down. Kansas Southern was up almost $11, and the calls were up about 300%, 400%. We played CSX. Initially, the stock went up, and the calls were up about 40%. Sold it right there. Okay, earnings. CSX was 69. That's CSX Corp, the railroad company, right? Boom, 71. This $2 move here, you would get roughly about a double on your money. I showed this one too. JP Morgan. So again, I don't want to sit here and write down the whole list here because the list is already there for you guys to do. Earnings, bang, 116, 121. The calls went from $1.50 to $5. This is JP Morgan, for God's sakes. It's not like some no-name company that no one knows about. And there are the ones which basically went the other way. None of the options went to zero. They mostly lost 60 to 70%. Here is something I was explaining to one of my ACS training members this weekend. And I'm going to ask you guys, if you put $100 in an option, what's your maximum loss? Dominic?
I usually go 60, 70%.
I didn't ask you that question. Let me rephrase the question.
Go ahead.
What is your worst case scenario on $100? You put $100 down on an option. What is your worst case scenario? What is your maximum? Zero. Thank you. So the answer to your question is your loss is not zero. Your loss is $100.
Right.
The thing is zero. So if this was a SAT question, you just flunked because you answered the right question, but you didn't answer it the right way. I'm just kidding, but seriously. So you lost $100. Now, Jody, what is your upside on if the thing goes the way it went and those calls exploded on a let's say you put $100 on one contract. So here you lost $100, so you basically lost everything. Your loss is 100%, which is zero. So Jody, if it goes the other way, what is your gain?
It's unlimited.
Thank you. There's a TA plus, whatever out there. Yes, it's unlimited. So you got to think like that. So that $1 call that you bought went to zero. The most you can lose is $100. So you're going to go in with that. But here it's unlimited. It could be 600. It could be 700. And it could be more. Realistically speaking, stocks also predetermine how much they go up. Generally, stocks on a big move, unless it's heavily shorted, it's not going to go up more than 10%. If it's heavily shorted, it can go up to, and if it's a smaller price stock, it can be up 20%. It happened. So yes, so just remember the simple thing. You can only lose what you put in. You don't want to put in too much, and you need to be a little bit diversified. Test it out, see the results, unless you put some skin in the game. This earnings season coming up, in my opinion, with the friendly market conditions, with the friendly seasonality, in my opinion, can be a big boost to all your portfolios. And remember, the way portfolios are structured, you want to always have the part of your portion of your portfolio which is in the high beta, fast moving type of options, right? So basically, that's the part which is your booster, the rocket booster that pulls your overall portfolio that might be sitting on swing trades much higher. So your net, your portfolio moves a lot higher. Now, so all types of traders, right? All types of members. Some of them say, that's it, I love that. I'm putting the whole kit and caboodle on that. Okay, sure. If you hit it, bang, your portfolio is going to be up 300% overnight. But the risk is that you might also blow up the other way. And it's happened, some of them. I had one guy cancel, and this guy comes and goes like 3 times every 2 years, all right? I bet you he did one of those. And he blew up, and he goes, cancel. And then he'll come back again 5 months later. I wrote back to him. I said, dude, this revolving door policy is kind of funny. Give me a call sometime. I like him. He's a Canadian guy. But I think he's got an addictive, real gambling personality. So he probably took a 2-punch and put it into like something, and boom, that thing went up a little bit, and then boom, that went down, and he probably got blown up. So don't do that stuff, all right? Doesn't matter what size account that you have. If you're a small account, stick to these cheapo calls that still go up 100%, 2, 3, 400%. Case in point, GameStop. Case in point, MPC, which is one of my favorite long-term swings and short-term swings. Marathon Petroleum, even AT&T. But GameStop, the calls went from 10, 11, 12, 13, 15 cents to 50 cents almost on Friday. That's up 300% plus. So a small account, you can make it really grow. So throw in a stock or two before we wrap up. Let's take a look at Amazon. Let me just showcase, Amazon's
Okay.
this week on Thursday. So this is going to be interesting. I personally think with the price, I'm going to go really long term on Amazon, which is the monthly. All right. Regardless of what the analysts say, remember, all the analysts were bearish on Netflix. The initial move on Netflix was significantly higher before it sold off again, and it's still buyable. So forget, that was Netflix. We did well with it. Let's move on. Had to be quick after the earnings to get out of the calls, but before that, we did very well. We were up 40 points from the time that I told you guys to buy it. What is this pattern here on the monthly? This is a monthly going back to 2015. This is your 200. This is your 20-month moving average. Wow, the blue one. I personally haven't seen this chart personally. Looking at it for the first time, the long-term chart. This, from a technical standpoint, this is looking. We have 3 months of a downdraft on Amazon. 1, 2, 3. That's pretty significant. 3 months the stock has been in the red. It is looking to me like this is looking to me like a falling wedge. If it breaks out, it's going to be the stock closed at 1762. First stop could be the 5-month moving average, 1807. And if it really breaks out, the stock is going to go to $1,900. So somebody says, wow, Amazon's at 1762, it can go to 1900. I said, yeah, what's the big deal? Let's look at Amazon being up 5% after earnings. Let's do the math. 1762 plus 5% is 1850. All right. So 1850 minus 1762 is 88 points. You think Amazon can go up $88? Come on. That's only 5%. So this is your long-term chart. I overall like it because all the trend lines, it's holding this very important trend line that the stock has bounced off many, many times. This blue line here, which is the 20-month moving average. This line. This one. See how it created a hammer? Now, technicals won't always tell you what's going to happen on earnings, obviously, but at least we're trying to kind of read the tea leaves a little bit. So it's holding up above that, even if it goes up a little bit here, little bit. I'm not asking much. It's 1860. Fine. That's still 100 points higher than here, 90 points. That's a long-term picture. All right, looking at it very simplistically. Let's take a look at the weekly. Now, I warn you, none of these are indicators what the stock is going to do on earnings, but I'd like to see, earnings or no earnings, what the technical picture looks like on the stock. So Amazon had a very powerful hammer reversal on, and remember one thing, Amazon has nothing to do with China and the China trade war. They don't do business in China. That's something to keep in mind. So let's set this up. Simple lines. Amazon had a monster reversal, which was in June, right there. And the stock basically went berserk from here. Here, it came back exactly to the same level and bounced, but it doesn't have the same powerful 1 week structure where the stock went from 1670 to 1810. That is a powerful candle. You want to buy that, like that's got a very high probability, 80 to 90% probability that the stock is going to basically rip higher. Here, it's a mixed story. It has a small one. It's trying to keep above the 50-day moving average. So, but it's still a falling wedge. And you know how powerful falling wedges are. You saw what Netflix did with the falling wedges, what I showed you guys 2 weeks before earnings. And the stock went up. In the meantime, Kramer and all these analysts are downgrading the stock. Kramer saying throw Netflix out of FANG. I mean, God knows what, you know. And the stock kept on going higher, right? So respect these falling wedges. This is a falling wedge right there. So if I'm going to look at this falling wedge and try to determine from a technical level, then I would say that 1836, 1840, if it breaks above this level, the stock is going to literally do this. If it breaks above this, the stock is going to do this and try to go back to its old highs at 2000. Now, interestingly, Amazon hasn't been downgraded like Netflix was being constantly downgraded. They're two different beasts, right? Netflix is facing a lot of competition from other streaming players. Even though I've explained in previous webinars, those competition mean nothing because the people who watch Disney streaming channel are not the same people who are watching Netflix. All right, so you're looking at two different beasts. So bottom line is you can have both services. Not a big deal. Netflix's content is way out there with stuff, and Disney's content is different. So bottom line is that let's look at the internal. So yeah, so I like it. So what I was saying was these analysts have actually been raising targets. If you go through the news feed on Amazon, you'll see I think there were 3 analysts over the past 3 weeks who have raised the target to 2,600. So that also helps because there's a wind behind their back. This is good. We like that. What happened last time? What happened last time it did this? Do you think it's going to be a pattern, a structural pattern symmetry? Yeah, most probably. This was way back. This was back in 2017. But this is what I'm looking at. It's very similar, and it broke out. So if that's the case, the big move is coming, because that's exactly what happened here. Then there was 3 days of a minor sell-off, and then the stock resumed its uptrend. So this could be at the cusp of a major breakout. That's all I'm saying. So I'm definitely going to be in there. Now the calls are going to be very expensive, so you want to buy something out of the money, and I'll try to find the best ones, and you guys got to figure out. You can also do a call spread. There you can do different option strategies, which I'm not going to get into. But if you want to play just straight binary, straight up or down, you got to buy them out of the money. And even the out of the money calls worked. Just recently, I bought the 1950s to test it out how it would work. First initially bought it at $1.60. It went to $2.60, almost 80% higher. Oh no, it went to almost 3, and then it pulled back and ended at around 170. And these are 1950 calls, for God's sakes. They're 200 points higher from here, and they still moved. Think about it for a minute. That means there's juice in those options. Options premiums are very elastic. This is your daily, slightly overbought. I like the MACD, starting to gain momentum. The way you look at the MACD and stuff is it's like gaining energy to make a bust a move. There was a big sell-off Friday because of the market, right there. And otherwise, this stock is still buying the stock around like 30 points lower, like right here. Retest the falling wedge at 1735 would be very nice. Stock close at 1762. Give me 30 points lower. I'm in those cheap calls, the 1950s. So if I get busted out, I'm not going to lose much. I already took one set of profits and I went back in again. And I showed you guys to do that, right? I'm not in like $19 calls that can collapse to 6 and I'm sitting there looking like an idiot. but I like the way they moved. 200 points out of the money, and they moved up 70%. Like, whoa, that's a pleasant surprise. So this is looking fine to me. Now remember, this is a highly manipulated stock, primarily manipulated by hedge funds who day trade Amazon big time, because they need to move big money. Big money doesn't trade stocks which go up 60 cents most of the time. They want things where they can be liquid. So $10, $15 type of moves, they can buy 100,000 shares and clean out $15,000 in an hour, right? So basically, or 10,000 shares. What am I saying? So if they buy 10,000 shares and the stock goes up 15, they just cleaned out $150,000. I said wrong the first statement. Take that back, right? So by 10,000 shares of Amazon, that's a huge amount of money. They can get 15 points on that on a day trading move. They'll take their 150 grand. So bottom line is we piggyback the options. So to me, it's still okay, and earnings are coming up. And now up to you guys. What do you want to look at? Jody, anything in particular?
Boeing.
Yes. So Boeing is this. It's an ugly chart right now, but the chart that I showed you on the quad picture is more important. The news that came out on Boeing is bad. Okay, it's almost like a cover-up, right? And that the pilots lied to the regulators. I mean, that's like what? So you have to be this candle was significant. Now, here is my thesis. There's a lot of, I personally don't think Boeing deliberately told the pilot to lie to the regulators about certain issues with the software for the MCAT software. I think you'd agree with me on that. I don't think they did. But the point is, that's like a Watergate scandal, right? So basically, I personally think that there is going to be news that comes out that the pilot was, there are in there, I don't want to get into too much, lots of gray area. And the pilot, as long as the pilot wasn't instructed by Boeing management to lie, the stock is going to have a vicious bounce. Because remember, when they're on the simulators, right? There'll be certain instances where where it's not working right, and Boeing went and tweaked it and fixed it and stuff. What? Boeing deliberately put a faulty product out in the air? I don't think so. That's my opinion. And put people's lives in jeopardy? I don't think so. Did they slip on some quality control and stuff? Yes. They've been punished for that. The stock was a $450 stock and it's down to 300. So they've already been punished for that. So my question is, technically speaking, Boeing is on the daily at least, it's severely, it's getting hammered. And it can go as low as, and I don't mind that, it can drop another 13 points to the 320, 330 level. All right? Because that is ugly. There's a lot of money that got blown out on Friday. Nothing changed on the moving averages, but that was one ugly candle. Now, if you look at the volume on Boeing here, this is 13 million shares, almost 14 million shares. It's almost capitulation. So I would say that I am going to be, this is your daily chart I'm looking at. The best place to buy Boeing is obviously here. That was a black swan event when that news came out. So this is almost capitulation. The last time this happened, same type of volume, was on April 8th. The stock went down for 2 more days, and then on April 10th it bottomed, and April 11th it rallied from 365 all the way to 385, 20 points. Okay, so that's a reference point you might want to consider. So 330.34 is a level that I would look at. I would also be looking at, there's a lot of inverse head and shoulders here. 1 second. This level here which is 336. So we're almost there. We might open at 336, 7 points in Boeing opening down. I mean, it's just, this is ugly. It is quite oversold. And let's take a look from a trader's perspective on the 1 hour chart. The 1 hour chart showed incessant capitulation. Look at this. Unheard of. They just let it go. So there might be more to the story that could be true than what I am, what I'm guessing is not true, which is the management. If the management told the pilot, which highly doubt, I mean, that's beyond stupidity, told the regulator to lie to the regulators, then Boeing's got going to $300, just so you know. But we don't know that. So it's still in a very tricky phase. Short, quick trades, in my opinion, are going to be very profitable. And by the time the earnings come out, if this thing dies down a little bit and they can show a slight movement in orders for 737 and also the 767s, then stock's going to be, back to that range that it normally trades in, which is basically 360 to 390. It'll be above that. So I think there's a great opportunity on that. You don't want to put too much in it, but I'll obviously be on top of it first thing tomorrow. Now, if I'm correct and I'm not losing my mind, Nvidia's earnings are not out yet, right? So they're not out yet, right, Jody? Okay. So Nvidia is a stock I like a lot with the backdrop of the friendly atmosphere between US and China, and Nvidia does a lot of business in China. Gaming is very strong. Artificial intelligence is strong. Their overall graphics cards are serious stuff. I think the stock goes to 220. So this one I'd certainly play. It's a good looking chart. It's a serious company and it's got a lot of room to move. So 220 would be my first stop. And then after that, you got 220. And then if you want to look at a weekly chart on Nvidia, it's over 220. Some hardcore shorts are going to panic big time, because then this major neckline is broken. This neckline has been a major resistance for months and months. And what is that neckline? 194.33. It breaks that by a margin of 5 to 6 points. See you later. This stock is going to go. So we're going to do a Fibonacci retracement on this. Are you guys with me so far? Dominic, Jody?
Yep.
Okay, sounds good.
On the 14th of November.
Oh, November. Yeah, that's my son's birthday. Wow. That's right. So we still have time on that. That's good. All right. So let's see here. Let's do a Fibonacci retracement, and we will arrive at a number. What can happen? So this is a late reporter, 14th of November. By that time, the markets should have gone through. That's after the phase 1 deal signing in Santiago, Chile. So that's good. I like that. That's after the where President Trump meets. I believe it is after where President Trump meets President Xi. So that'll be good. Get a deal signed. Nvidia rips. What more could you ask for? 50% retracement is 208. That's just around the corner. 61.8% retracement is 228. So I would say between 210, 228, 230 is where the stock's going. Now, here is something that you might want to look at from a technical standpoint. Hold on. Is trying to read the tea leaves without getting boring. All this is fine. Look at the weekly accumulation. The MACD is moving up nicely. Histogram's green. All through this vacillation between 193 and even 133, look what happened. This stayed green. So as it climbed up and kind of kept on going, 2 days down, 3 days up, all this is telling us there's accumulation going on. Institutions are buying. Net, it's positive. This is net positive. No question about it. This is good volume. So looking at the moving averages here, we are starting to see the 20-day moving average just about to cross the 34-day moving average. The negative is that the 50-day, I'm sorry, this is week. This is not day, 50. This is the longer term picture where the stock can push itself up towards the high 200s. So trying to read the tea leaves here. So bottom line is, if you do the range math, 200, bottom is 130, or let's call it, 130. So that's a 70-point range, right? 70-point range. So if it breaks out with serious earnings, favorable market conditions, US-China phase one deal out of the way, we are going to add 70. This is more of a longer term picture going into towards the end of the year. The stock will hit an old high. 200 plus 70 is 270. It's going back right here. Okay, we've seen this happen a lot. You don't need to be a rocket scientist to figure this out. Technically speaking, the 50-week moving average needs to turn higher. So far, these lines are good. And now we're going to take a peek at the daily. I'm going to wrap this up. So the daily is kind of flat, but we are starting to see the first signs. Remember, you always make the big money on getting in things early, especially on the longer term ones. So you got the 50-day moving average starting to move higher. And this is a really powerful stock, okay? So this is not like some little biotech looking for an FDA approval. So this is good. This is good. The 20-day moving average is starting to creep up. So overall, yeah, it's really a range play. It breaks out over this, it's gonna make a beeline for 220. So let's try to capture as much of that as possible. So that's it, guys. Thanks for stepping in. It's going to be a busy week. Try to do as much as possible. Windows of opportunity in the stock market don't come every time. We are in a favorable zone in the market, in my opinion. If anything dramatically changes, some critical catalyst out there, economic or fundamental or economic, or global political stuff changes, I'll be the first one to alert you guys. If something technically changes, I'll be the first one to alert you guys. And the last thing that we never got a chance to see is the S&P 500. What is the S&P 500 doing? S&P 500 is doing totally fine. And everybody and I'm not going to say them on this. That's terrible. Everybody and their sheep. How about that? Are so dead scared. It's not even funny. You see the fear in the market every time it's down 100 points. Like, oh my lord. Okay, it's great. We want that fear to stay. That way we still get prices we can buy into. So this to me looks A-okay, a little bull flag, and we are going back at least to retest the highs, which is 30-40. That's a lot. And if we meet any one of these lines that were drawn weeks ago, then we are talking about 30-58, 30-71. On the lower end, we want to hold. We have to hold the uptrend line here at 29.50, right there. See this uptrend line going back all the way to the Christmas Eve massacre, 1224, right? We need to hold this, which also happens to be the 50-day moving average at 29.44. So this is a pretty clean-cut chart. Highly suggest when I post these charts, you can print it, you can screenshot it. Just don't print it, screenshot it, and put it in a folder so you can look at it anytime. And so far, so good. But these are your major supports. 29.45, 29.70, minor support. Uptrend line, 29.50. We want to stay somewhere above this so that we can get enough juice to basically energy and the booster, rocket booster that we need to get towards here. So this week is a very critical week. And that's about it. Like they say, you got to be in it to win it. It's really as simple as that. God bless you all. Thank you. God bless America. Good night.